Have you ever looked at a market chart and wondered why price acts the way it does? Why does it rebalance? Why does it reverse? And how do these mysterious gaps hold the key to it all? In this video, we're diving deep into the markets, analyzing price behavior through strategic and tactical matrices, and breaking down two unique classifications: corrective rebalancing and target rebalancing. And now let's take a look. So we had the first reference point. This is this gap, and the second one is this green gap, also on the daily time frame. That is, at the moment the price came here, broke through this structure and again rebalanced to this gap. So you can see it here on the hourly time frame. We'll see what's going on with this. What are these points, depending on what size the gap is, and so on and so forth. And we will talk about it further. But the point is that at the moment when we rebalanced, the structure broke down. And at that moment, we are already moving within this matrix. We have the next matrix. It's this strategic matrix. That is, we have this goal. And we, roughly speaking, rebalance once, roll back again, there is a gap. We rebalance and move on. And as we go along, there's a bunch of gaps. And I mean, again, keep this thing in your head. Where from and where to. But within the gaps, I'm sure that 95% of you have not applied it in this format and in this view. So make sure you work with the charts. See how it's shaping up on the instruments that you're using. And now we're going to talk about some more classifications that will help you contextually understand and structure the price behavior within the gaps so that you understand where to look. So let's move on, and I want to show you one more classification that will help you navigate properly in the space on the ground. Not just some theories to operate, but clear, concrete concepts that will give you clear, concrete instructions. We have what we have listed: the strategic matrix and tactical. So it's like a matryoshka doll. It's like a nesting doll. And now I'll show you two more classifications. The first one is called correction rebalance C-rep, and the second one is called target rebalance. And what is the point here? I mean, the point is the following: some of the gaps will perform the function of correction. That is, they will be in this format: rebalanced, the price went somewhere there, the gap remained, the price rolled back in it, rebalanced, went further, there is a gap again. The price rolled back, rebalanced, and moved on. So this is what would be called a C-rep. It's short for corrective rebalancing. And there will be gaps like this. Like, for example, here, when the price was here. Right here on the hourly time frame, there was a gap here. That is, apart from that, in principle, there was this gap. I'll explain further why it doesn't fit. That is, in terms of gaps, we have this gap. This gap is the final one, which is in the gap of the strategic matrix. That is, of the senior time frame. And here we have corrective gaps. That is, the price fell, broke the structure, rolled back, broke the structure again, rebalanced again, rolled back again, or rather, fell down, rebalanced, fell down, rebalanced, rebalanced, fell down, rebalanced. And I came here. That is, in fact, these three green gaps are the target rebalancing. That is, they act as a magnet. That is, of course, it should be combined with the understanding of liquidity and with other elements, but for now, we are gathering the essence piece by piece. And some gaps will be corrective. That is, what can we get out of it? If you understand this matrix of gaps, where target gaps, or TREP and CREP, are directed, then you understand that if you have assumed, for example, that we will have a downward movement, it is profitable to sell here, for example, and you realize that here we have a gap and the price will not cut through it. That is, there is no sense in it. So it is profitable to rebalance it and go down, then rebalance it again and go down. And these target gaps will be pierced further because they stand in the way of the main movement. And all this should be overlaid on the first matrix, which I told you, tactical and strategic gaps. And then the second matrix is corrective and targeted rebalances. So when you start looking at the market through this prism, there's even this simple information. Yes, I mean, we haven't started to go into how to capitalize this, what are the ways and so on, what are the nuances. Again, I will repeat that I am not giving you everything here, but the essence. If you can understand, even through your small experience, where the trend is directed, yes, or where the price potentially wants to move, then if you can understand which way the C-rep will be yes, that is corrective rebalancing. That is, if you have, for example, broken the structure upwards and a gap was formed here. That is, you understand that this gap, if the price rebalances it and just such gaps, there is a very high probability that they will be rebalanced immediately. That is as quickly as possible. That is, the price finds support on them and flies somewhere else. So if you see it in combination with other factors, elements that you have, with contextual ones, or you have a system and so on and so forth, if you combine it, it gives you a clue. That is, you realize that if we have this corrective gap, it will give a reaction. The price will go somewhere. And usually, well, there are a lot of them. Yes, that is, here it is, here it is, here it is. Well, on different time frames it is. This gap also rebalances. This shadow, yes, came in and flew away. That is all. Hints. And when you realize that the price moves in this format, you move with the market using these C-reps. And again, for example, when it is indices, yes, there, when the price is already at its peaks, there are no gaps, then a little bit different subject is used there. But again, it is not about that. But if you trade euro, dollar, pound, dollar, for example, then there are some gaps at the top and at the bottom. And you can be guided by that. And that is when you understand where the target gap is directed. You realize that the price goes there for some reason. And everything that will be, for example, if the price goes up, everything that will be at the bottom, these are correctional ways to enter the market. That is to say, doping, 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 doping. Then something there, for example, the price, for example, like here, yes, has done its work within the strategic matrix, but in the course of this movement, a gap was formed somewhere else here. Then there is tension. For example, as one of the options, the structure breaks down, and you realize that, aha, now most likely this gap, which was formed within this upward movement, will now be the next point of the strategic matrix. Yes, and within this strategic matrix, there will be such target gaps. That is, you understand now, when there is, for example, a breakdown of the structure, all the gaps that are at the top, we will have a corrective rebalancing. I mean, the ones that are not supposed to be gaps, I mean, again, we need to take into account the factors, where to put the stop loss and so on. There's a lot of nuances there, but the essence, and you realize that now you move together with the market. So this is the story, and that is, at first glance, it may seem like, like shit, it's obvious, I already knew it, and so on. But again, I repeat, there is a great truth hidden in this simplicity. That is, well, the market is not something super complicated, incomprehensible, and so on and so forth. That is, it is a very simple mechanism which is coherent, which is systemic. Yes, they try to confuse the market and so on and so forth. But if you start to look through the prism of what I am showing you, you will realize that basically everything goes like this. And again, I will make a reservation that just by looking at my examples, it does not mean that everything, now you have learned the truth, now you have adopted the information that I have told you. No, I'm just pointing out the points. And your task now is on the charts, on the instruments that you're trading. Instruments that you trade, why you are observing, to apply it to your own needs. That is to see what time frames are there and whether it is really so, to check it. That is, if you check it, you will be convinced of the truth of what I'm saying, especially on indices. That is, indices are mega structured. So, well, even for training, try the indices of the same US 100, US 500. Well, these two indices are enough. The same story works with Bitcoin, with gold, with the euro, with the dollar, with the euro pound. But again, I repeat, everywhere has its own nuances, and it all needs to be encrusted in your system. So we will also talk about this further on. So we move on, and we start to slowly put everything together into a coherent system. And this approach, in what I've shown you, and again, we're going to look at different examples, only, well, we're not going to limit ourselves to just what you see in front of you. We'll look at other options now. But in this whole system, yes, let's say you understood what I told you before. And if we summarize the whole essence, what I have shown you, there are three most important questions in this system of working with a gap. First, where is the point of greatest resistance? Second, where is the point of least resistance? And the third, how do I enter the market? So these three questions are basically all you need to know. Now let's focus on the point of greatest and least resistance. And then we will talk about how to enter the market and what are the nuances of gap selection and so on and so forth. So there is such an essence that when you see some unbalanced gap or some, well, specifically here, let's talk in essence, there are two formats of the least resistance. It is an unbalanced gap that is not covered and liquidity after full rebalancing. What does it mean? I mean, for example, yes, at the moment when the price was here, yes, this gap was the lowest resistance. And when it was closed completely, I will tell you all the nuances and parameters. When it was closed, at that moment, this zone became the point of the highest resistance. And at the moment, that is, we saw the break of the structure. And when the price came to this gap, that is, it does not matter where you could enter. For example, you could enter there even on the first touch, yes, or there on the full overlap of the gap. And at this moment, you cannot be afraid because this is the point which, well, that is, the price was moving. That is, this gap was interesting, yes. That is, it is likely to be shut down. I will now explain the parameters that we need to look at and that indicate a higher probability that it will or will not be closed off completely. But at the moment when we saw this breakdown of the structure, yes, we realized that we have a strategic matrix down there. We have target gaps, T-rep, yes. And so this gap in the moment, as well as this one in the moment, started to act as a C-rep. That is corrective rebalancing. And in the moment, they were the point of least resistance. That is, before moving down, price needs to rebalance this here market inefficiency. Again, now we will also talk about details, nuances, and so on. What is the point? That is, I am telling you now and then, we will look at different examples. That is, I will try to answer, let's say, as comprehensively as possible, the questions that you may already have in your head. And what is the point here? When this gap is closed, there is no reason to go higher. Because we had a breakdown of the structure, and again, we need the context and so on and so forth. And at the moment, this point has become the place of greatest resistance. That is all. Now everything will be a resistance for the upward movement. Plus, in parallel here at the moment, a block order was formed. There are a lot of points of greatest resistance here. I have 5 of them. But now I will show you only one, something that you are familiar with and that you can basically combine. This is a gap together with some smart money element, some block. So it could be an order block, it could be a breaker, it could be a rejection block, whatever. That is, at the moment when the rebalancing has been done, that is, the work has been done, and we understand the strategic matrix where we can potentially move forward. And this is where the work has been done completely. And there are some additional confirmations here. That is, at the moment, this zone becomes the zone of greatest resistance. That is, you can actually put a stop loss here or put a stop loss here and not be afraid of being pulled down there. Because at this moment, this zone has become the zone of the greatest resistance because there is a rebalance gap and there is an element of smart money. That is, in principle, there is no reason for the price to move further. And at this moment, when this rebalancing occurred, this point became the point of greatest resistance. Immediately, the work of the algorithm, which covers gaps and liquidity, changed. And immediately, it began to move to the point of least resistance. That is, the algorithm is moving. And from the point of least resistance, or rather, from the point of greatest resistance to the point of least resistance, overlapping there, some liquidity, gaps, then this, when the work was done, definitely, that point becomes the point of greatest resistance and moves in some other direction. And just like that, one by one, this whole story changes. And that is when we Let's say we outline, right? This zone has become the zone of the highest resistance. That is all. We realize that the price will not rise higher. Somewhere out there for a terrific year. Some kind of rebalancing. And at this point, we should immediately run our eyes to the zone of least resistance. And as I said, the zone of least resistance is unbalanced gap and liquidity after full balancing. That is, specifically here we have unbalanced target gaps, they are green, plus strategic gap on D1. And this is liquidity. And I reinforced, when I found all this and structured it and imagined it in my head, again, this is all the analysis going on in your head. So you need to operate not just with some dry concepts, but somehow represent it. I understand that the price has become heavy here. Some impassable resistance has formed, a powerful pro-trade. There is no reason to move further because everything on the market is done with profit. If it is not profitable to move higher, the market will not do it. Accordingly, these are the things that I have mentioned to you. 3 main questions: the point of greatest resistance and the point of least resistance. Now we will talk about how to enter the market. But again, summarizing, you constantly need to understand where the point of greatest resistance is at the moment when there was this fall and it took off the equal bases here and then drew these equal bases. At the moment this point became this whole zone, this became the zone of the greatest resistance. Why there was a liquidity sweep here, and in principle this is one of the moments. Yes, there could be a gap here, a gap rebalanced, there could be a block here, and so on and so forth. It doesn't matter. That is something in some format. Then the price started to move higher. That is, if you look here, there were also gaps, and at the moment this zone became the zone of least resistance. And the price came here, that is, it moves without resistance. When it did its job and broke the structure, this whole story became the zone of greatest resistance. And this liquidity of these gaps became the zone of least resistance. And that is, in this format, the market moves from one target to another target alternately. And now you can consider and understand all these things. Let's move on, and in a slightly more dynamic format, let's see how it all applies. Again, if you have a bit of a mess in your head, I recommend reviewing first the segment before this video where I tell the essence of perhaps there at x2, you can look at x1/2 and write out the whole essence, and then come back to this example that we are now going to consider. Again, we look at the daily time frame. That is, you can look at the weekly time frame. And here we have one tight gap on the weekly time frame. You can clearly see it here. And at some point, the price was growing before that there was a rebalancing on the weekly time frame, and the price was growing and growing. And here, in fact, from this week to here, there were no gaps. And now it is time to rebalance. Again, we will see it now on the junior time frame. I have a couple more comments there. But now we are talking specifically about indices, and on other instruments, it's a little bit different story. But in general, everything is 70 to 80% similar there. There are just some nuances that you need to calibrate. But here we have one weekly gap, the only one that can be seen, and there is liquidity, and we have come to it. That is, if we go, for example, to the daily time frame, we see here a daily gap, and after this fall, we have here also this daily gap. That is actually, this descending structure was a strategic matrix of gaps, which in turn removed here pools of liquidity. Here the price came here, and at the moment when it broke the structure here, we will look at a smaller time frame. In the moment, this daily gap and this liquidity became the next target for the movement. That is, in fact, we did one job within the strategic matrix, and naturally, within the framework of this downward movement, it was also possible to go in and make money. But we knew that there was a gap here which should be rebalanced, so we rebalanced it, and then the structure changed. And here it is, the same story. That is, everything is fractal in this format. But again, I am trying to guide you. Well, I do not do it in such detail. It all takes me 2 seconds. That is, I have marked one marking, I have marked the other, and understood and calculated. That is, the context is automatically formed from the start. You don't need to be some kind of Nostradamus. It's just read right away. I'm explaining it for you as for children so that you catch all the moments and nuances. That is, in fact, the number one movement is this. At the moment when we rebalanced here, we found support and moved on. And this is the first story. And then we move to a smaller time frame and see what and how we could trade here. Here we had a gap. After that, we had a move here. Now we will look at interesting to look at on the hour time frame, because on H4 is not particularly profitable, not particularly interesting. That is, it is interesting to see how it looked more detailed. What is the story here? Here we have a more detailed gap on H1, and what is the structure here? Here we have a breaker, and here we have that. In principle, these points are more than enough for entry. Now let's see more. And it is interesting to see the history on gaps. Again, we have a more detailed entry at M30, touches in this H4 gap and H1 gap. But here it was possible to enter from the rejection block. That is the essence of what, again, let's see M15. I could tell you, but I would give you all my systems, everything that I have packed, everything that my clients go through. Well, I am not going to do such things, but I show you the essence of the logic. And for example, this gap that we have detailed, yes, the price has come into it perfectly. And here you can enter in absolutely different ways. That is, for example, from the word structure. Well, I will tell you some basic things, and you think and look at the essence. Again, when we understand that this gap is rebalanced and there is a breakdown, and then we have a rebalancing gap again, we can go in again either from here or from here. Now let's see how we could enter. Again, here we could enter from a higher time frame, and here was a gap also at M15. Again, in principle, here is a breakdown of the structure, a pullback, rebalancing of movements. And here in these points, fractally, we can find some entries at M5 and at M1. That is, everything is fractal. It is important just to understand where we are coming from and where we are going.